Entre pa' que te enteres, este es el detalle. Si caliente está la cera, más caliente está la calle.
Mira, llegó el son cubano.
Hola mi gente, and welcome back to the We Are Investing channel, a channel that is dedicated in investing and personal finance. On this video, we are going to go over a new SPAC, a SPAC that we purchased, we posted on the Patreon as soon as we opened up a position. Now this SPAC is VGAC. They are going to be merging with 23andMe. So the premise of this video is going to be doing a deep dive into the company. I'm going to let you guys know why I like it and why I bought it, and if my plans are to trade it or to hold it long term. So before we proceed any further, please consider hitting that subscribe button, ringing that bell, and smashing that like button. Turn that baby blue. And please be aware that there is a Patreon for this channel where I post whenever I open or close any position, so you get to follow the portfolio in real time. You also get access to a Discord server of over 300 members, and you also get early access to videos. A link to the Patreon will be provided down below. So like I said, we opened up a position as soon as this deal was announced, and that position is performing already very well. We are up 11.61% for a total gains right now of $2,575. Now, if you take a look at the chart, the stock is currently trading at a share price of $16.04. On Friday today, the stock didn't have a great day, but that's okay because on Thursday, it had a hell of a day. On Friday, the stock dropped 9.12%. And I honestly think that this is going to be a buying opportunity for many investors to get into this stock after the run-up, because I do think that even at $16 a share, the company is undervalued and has great long-term growth prospects, and I think it's a company that people should really consider investing in. I'm going to explain all of that in this video. Now, looking at the charts, we do have a support line at the $15.75 range. I don't know if we're going to retest those lows, those support lines. If we do, I would expect the stock to bounce back. A key level that you want to look at the upside is at $17 a share. That is going to be a resistance line. I think it's going to be a pretty strong resistance, but even in after hours trading today, the stock is moving up higher. So if we break through $17, we would then potentially gap up to around $18. And at the current price right now, those are nice gains. So what we're going to do now is we're going to head on over to the investor presentation. I'm going to cover some slides. I'm going to do a deep dive into the company. We're also going to take a look at the financials and the transaction summary. We'll wrap all of that together with my final thoughts on why I like this company, if I plan to trade or hold long term. Now, headed on over to the first slide, you can see that their mission is to help people access, understand, and benefit from the human genome. This is going to be a stock, a company that is in the genome sector, which is a sector that is absolutely booming right now. Valuations are expanding, they are growing rapidly, and that means that this company, this stock, has a lot of upside. Now, what separates this company from the competitors, in my personal opinion, is their database. On this slide, you can see that they have 10.7 million customers. And the footnote states that 8.5 million of that 10.7 million are customers that consented to research, meaning that this company can use all of that data. They can leverage that data in many ways to help improve therapeutics, to help improve the lives of these customers, and to really create a great business. Now, some of the value that customers get from this company is insight on their genetic code, and also if they are at high risk for certain illnesses, such as 12,000 plus customers with an increased risk for chronic kidney disease were identified by 23andMe. 6,000 plus customers with a tested BRCA1/BRCA2 variant, that is a variant that is very prominent in breast cancer, and 7,000 customers with hypercholesterolemia FH variants. So right off the bat, you might notice one of the key reasons why I'm excited for this company and this stock, and I think it's going to be a winner, and that is because of their data. If we take a look at this slide, you can see that data is a very big problem. In order for us to crack the genetic code we are going to need large swaths of data. That database is going to have to continue to expand. It's going to continue to improve. The more data we have, the better the system is going to be. And this company, in my personal opinion, is leading the way in data. And that is because, unlike most companies in this sector, this company is direct to consumer and not business to business. It puts its products in the eyes of its consumers and goes right to the customer. And it is that reason why they have so much data. Other companies, they are business to business. You have to have an illness already, or you need to be doing research. It is not direct to consumer levels, and that is why 23andMe has over 10 million customers. Now, their main product has been that DNA test, which is a one and done thing. However, in October 2020, they did a soft launch of a subscription product. Now, I am a huge fan of subscription products because that is reoccurring revenue for a company. And if they're able to grow this subscription business, that is going to be nice revenue for the company. And as they build up the amount of people that are subscribed to this product, they're going to need to spend less money on marketing and getting subscribers. Now, another thing with this company that I think is presented really well in this slide is because of their data, this would be a great company to create study groups for clinical trials. If you need people with certain genetic codes in order to conduct your study, your clinical trial, or you just want to have that added information, this is a great company to go to because of that huge database. Now, they had 1.1 million study participants, and they had 750,000 consumers who participated in the COVID-19 study in the first 90 days. The company also has a strategic collaboration with GlaxoSmithKline, GSK. GSK has $300 million equity invested in the company, a 50-50 shared cost and profits, and the company also has access to GSK technology and platforms because of this collaboration. All right, so here's the thing. We have a company that has a lot of data on people, on their DNA, and that data is going to be very useful. But the end goal is to be able to use that data to create therapeutics, to make drugs off of that data and help save lives. And this company, because of that mission statement right there, how they want to shift their business and then be able to leverage and use that data for the better good, is rapidly scaling their therapeutic discovery efforts. In the fiscal year 2019, they had 2 validated targets. In the fiscal year 2024, they want to have around 37 validated targets for therapeutics based on the knowledge that they have from their data. So in a nutshell, what we have right now as a company, the products that they are going to be providing and / are providing today, you have their kits, you have their subscription product, and then you also have potential future therapeutics. Those 3 are your drivers for growth. And I also see an avenue here for clinical trials, using that data, selling that data to other companies so that they can perform clinical trials. Now, the annual kits, they're estimating they're going to have 2.5 million kits sold in the fiscal year 2024. Their subscribers, they want to grow from basically 0 right now to 2.9 million by the year 2024. And like we just said earlier in the prior slide, therapeutics are going to grow from 18 this year to 37. That is the mission. Now, here's the thing, guys. The company is shifting to therapeutics. They're doing this hard. That is where they really see margins improving and where they see the better total addressable market. So there is going to be a dip in revenue while the company transitions. Now, this might be alarming to some, but here it goes. I am going to be holding this stock long term, and I am okay with the revenue drop for the mission of the company. I think switching their primary focus over to therapeutics and using this genomic database to help save lives, to create a stellar business, I think is well worthwhile. So the fact that the company is going to be dropping revenues in 2020 to 305 million to 218 million in 2021, and then start increasing revenues again, I am okay with that. That I do understand heading into this investment that revenues are going to be dropping for a little bit of time, but I am okay with that because of the overall goal. Now we're going to talk about the transaction overview. We're going to see what the valuation of this deal is, And then we're going to take a look at another company in the genomics sector, take a look at their market cap, their valuation, and see how 23andMe holds up. Now, the market cap at $10 a share, because there's going to be 448 million shares, is $4.4 billion. They have $984 million in cash from this SPAC transaction. That is a large amount of money. We're talking almost $1 billion that this company can use to grow the business and really help grow that therapeutic segment. Now, the enterprise value is just the market cap minus cash plus debt. The company doesn't have any debt listed here, so your enterprise value is $3.46 billion. Now, taking a look at another company. Now, the company we're going to take a look at is CRISPR Therapeutics. Now, this is a company, a biotech company, and they deal a lot with genomics. Now, their market cap is $12.5 billion. Taking a look back, we were at $4.4 billion at $10 a share, which means the market cap right now for 23andMe would be around $7 billion, which is far less than the market cap for CRISPR. And I actually think that 23andMe is going to be a better company because they're pretty much the only company that has been direct to consumer and has this huge database of over 8 million customers who opted for research, meaning that you can use that DNA to create products to help the business, to really help trying to crack the genomic code. So with all that being said, I hope that you guys understand why I think there is massive potential for this company. Also, I want to throw in another factor here that I think is going to excite a lot of investors. And I think that ARK Invest is going to invest in 23andMe just because they seem to be a stellar company, a very innovative company, a company that has a huge database when it comes to genomics. And you know that ARK Invest is investing heavily in genomics. And also, back in the day, Cathie Wood has tweeted about 23andMe. Now, this is back in 2015, but she said 23andMe has sold enough DNA kits to accumulate genetic information on 850,000 customers. Genomic revolution. Well, that number has expanded to over 8 million customers today. And if Cathie Wood was excited about 850,000 customers, imagine how excited she is for over 8 million customers, and that number is just going to continue to grow. So we have a company that is in the genomics sector. ARK Invest might invest, and they have products where they're going to get paid from customers and also potentially companies that are looking to use their data to create products, drugs, or also using their data to get study groups for clinical trials. And there might be other ways that this company can leverage that database to make money. So I will be holding this stock long term. Now, if the stock just starts to shoot up and explodes and I 2x my investment, I like to take some off of the table, remove some risk. That is the way that I like to play almost any trade. But I do plan to hold this long term. I plan to hold this 5-10 years, maybe even longer, because I do think that the business model is sound, it is solid, they are unique, they have a moat, they are very early into the game, their database cannot be touched by any other company in my personal opinion, and I think the future is bright for 23andMe. So I am invested for the long term, and I hope that it is a good ride. Now that wraps it up for this video, guys. If you like this video and the content that I am providing, please consider hitting that subscribe button, ringing that bell, and smashing that like button. Do not forget about the Patreon page where you get access to the portfolio in real time. I post whenever I open or close a new position. You also get access to a Discord server of over 300 members and early access to videos. Down below in the video description are links to my Twitter. I am also being active on there, a Facebook group, and promotional links to Webull, where you can get 2 free stocks valued up to $1,600. But you know the deal. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. See ya!